Welcome back to the channel where technical analysis is simplified. My name's Michael. I hope you're feeling healthy and well. Now in this video here, we're going to be taking a look at Bitcoin on the big picture. Of course, we did have that big dump that took place late last week. I hope all of you were well prepared for that. So I'm going to be bringing this up to date, what I think is happening on the big picture. Also some short-term trading on Bitcoin and some altcoins, and preparing for the week with the fundamental announcements. Also telling you all about the Jackson Hole Symposium. As usual, we have a lot of ground to cover, so let's just get stuck into it. This video is for education and entertainment purposes only because I'm not a financial advisor. Always do your own due diligence and your own research before making any financial decision. Make sure you check those links out in the description below. You can sign up for our free newsletter where we cover cryptocurrency, but also real estate and the economic cycle. Also, you can get yourself some free money and giveaways using those special links in the description below for those exchanges you can see listed there. And also, I do reference a TIA Gann swing indicator throughout all of my videos. It's my most used trading tool. I use it for basically every single one of my trading decisions. So you can also find that link in the description below. Now, I like to start my trading week by going over to forexfactory.com/calendar. You can set this website up rather into whatever time zone you are in the world. So you can see what times and dates that these announcements are. So the way I use this information, I don't care about what the fundamental data does come back at, because if you do look at it for long enough, you realize that these numbers can come back. It can be perceived as being better than expected, or the numbers can actually be better than expected, but it doesn't mean the markets are going to go up. So while a lot of traders do hang out for whatever this data comes back at, and investors as well, I do believe that you're always going to be left behind the 8 ball waiting for these figures. But the way you can get ahead of the market is by looking at the impact. So we can see the red boxes are the high impact announcements, and of course we can see the dates and times of these high impact announcements. Now I pay most attention to the US dollar, USD here, because obviously US is the largest economy in the world, and that being the case, a lot of people want to know what's going on over there because they think it's going to be affecting the entire world. Sometimes it does, but at least in terms of the dates and prices, we can get a good volatility reading, because the markets can drop off in volatility leading into these announcements and then pick back up after the announcements. Now, the big news, if you've never heard of the Jackson Hole Symposium, that's going to be popping up on your feeds throughout this week, because at the end of the week, there is a meeting where a bunch of people get together, prominent bankers and all the rest of it get together to have a few discussions about the economy and what's going on. Now, I don't really care about what they're going to be saying in terms of a trading perspective, but I do care about it because I do think there's going to be more volatility into the end of the week. A lot of traders and investors scramble trying to listen to what's said and then trying to predict the future. And just to give you a little synopsis on the symposium, we can see that the symposium proceedings are closely followed by market participants, as unexpected remarks emanating by the heavyweights at the symposium have the potential to affect global stock and currency markets. So the reason this is important for trading is because as everyone scrambles to try and predict if it's a positive thing that's whatever said or a negative thing, we can get a lot of fake outs in the market, especially on the short-term charts. So you can have your support and resistance levels, but what you can find in these particular times is that we can get lots of false breaks as the market just does scramble around, which is why I want to bring it to your attention. I think it's a mug's game, especially for us retail guys trying to predict what's going to be happening by whatever's said, because after all, so many other people have this information before us. The mouthpieces that are speaking it at the time in these meetings, they've already taken action, and so have their buddies and everyone else that is in the know. We can just stick to the charts and look at the breakout levels, but I do find it important to be zooming out a time frame, looking at the slightly bigger picture, as you can get a lot of false breaks on the smaller picture when this stuff is going on. So with the fundamental stuff out of the way, we can see our dates and times, we can keep this in the back of our mind, then we can just jump over into the charts being aware of these things in the background. So that's enough about that. Let's first start out with the big picture before we do get into some shorter term trading. Now, starting out with Bitcoin on the big picture, I'm on the weekly time frame. If you do recall, over a month ago, I spoke about the macro trend turning up. Now, I knew the macro trend turned up because the background turned green, and here's the plug for the TIA Gann swing indicator. I use it for my trading and also my investing. So if you want to look it up, there's a link in the description below. But essentially, the macro trend did turn up, but at that time, I said I was discounting the trend on the fact that the market was still down overall and was still below a lot of key technical markers, one of them being our trend line and also our 50% levels. So that's why we didn't really see a big acceleration to the upside when the trend did turn up. But I also said we had to respect the trend, and many altcoins and Bitcoin as well went up many tens of dozens of percent from that point. So essentially, we did get that grind higher. The market did start to break down, and broadly speaking, the price is just really churning in a few $1,000 period. This is for Bitcoin, of course. Altcoins have been churning in a slightly bigger picture, channel, because obviously altcoins put in bigger picture gains and also bigger picture losses or percentage losses. But broadly speaking, the market is still churning around, trying to regain at least to the strong half of this trend line, which does come from the all-time high down to that next macro lower high. Now I've just got these little suckers rallies marked up in here because, as you can can see, they are just bear market rallies until the market does work into a technically strong position. And I do have a dedicated video where I've talked about the bull market and what needs to happen for the market to work into a technically strong position. But at least for now, we are still just talking about grinding upward moves and, bear market rallies until we do get that bigger picture confirmation. So it's no surprise to see Bitcoin as well as some altcoins fall, putting in a correction after the markets have been up for a couple of months. So what's coming up next, we're going to be taking a look at the short-term timeframes for that. Now I'm on Bitcoin now on the daily time frame, and those of you who have been around for a couple of months will recall that I had a price zone of around 18,500 up to 19,500. Now I first spoke about this price zone all the way back in late June. We did get this bottom that did come in on the 18th of June. The market bounced, and I said the worst case correction zone for Bitcoin was around 18,500 to 19,500. If the price does correct back into there, that's okay. It's nothing to be alarmed about, and there's every chance the price is going to continue going up. And of course, as history would show, we did get a couple of corrections into that zone, and the market did continue up. So this price zone does remain an important price period or a price point for Bitcoin, and obviously cryptocurrency as well. As you can see, as we are in this current downtrend at the moment, I would be expecting support to be coming back into this price zone again. If we start to break down below around 18.5, I think this low that we saw at 17,500 is the least of the worries. I'd actually think we're going to be busting through there and going lower. But of course, we're not there yet, and we are still finding some support on the 50% level and also the diagonal trend line, which is holding the market up for now. Now I have strong and weak marked up on the chart. And the way I use this terminology is I'm looking at my 50% level and also my trend line. When price is trading on the top half of these tools, which it is for the 50% and also the trend line, it's technically in a strong position. But if it does break back down below, then it's obviously in a weak position. And the way I use this information is if we do break into the weak half and we start to see some closes and lower tops, that's when I'm expecting the price to be falling down to that next correction zone. So for now, the price is holding up okay. We did get a weekly close above the 50%, but I am still watching these levels very, very closely, being around 21,500 bucks, at least from where it currently sits, and the diagonal trend line is a few $100 below there. And what's also really important to do is to look left on the chart, just like when you're crossing the road. You can see some previous areas of resistance all the way back in late June. So we are trading below that previous resistance. So I do want to see the price of Bitcoin get back above around 22,000 bucks to be more confident that we are going to be bouncing. But at least for now, we've had some really, really good support come in at a low price of $20,760. So overall, while we are technically in the strong half, I'd be expecting us to get back over 22,000 bucks and potentially work a little bit higher. But as soon as we do start to see some short-term closes and lower tops below these weak areas, being around this 21,000 for round numbers, then it is just a case, at least for me, to be going with the flow of the market and expecting those lower levels to be hit by the way of this worst case correction zone coming in around 18.5 to 19,500 bucks. Now, Ethereum, like the rest of the crypto space, has also seen a pretty decent correction. But if you do look broadly speaking, it's still faring in a better position than Bitcoin because it's a lot further away from its lows that we did see in June. Bitcoin's hanging out a few percent above the lows, whereas Ethereum is significantly higher. But the overhead levels and underside support levels I'm looking at for an ETH does remain at that 1,800 bucks as overhead resistance, just like I was looking at from the top of the market. I was saying if the price of ETH could hold above 1,800 bucks, I was confident of a pump into around 2,100 to 2,200 bucks being the next overhead resistance level. But of course, as soon as 1,800 bucks did break down, we got that acceleration to the downside. Now it is searching for that next area of support. Now the 50% level I'm looking at on the intermediate time frame does come from the top down to that previous low. Now you could be using any one of these lows because they're very close to one another, but you can see that price comes in at $1,514, and you can see that's basically the exact low at the moment. Now, of course, if the price does break lower, I'm going to be looking to that next bigger 50% level, which isn't too much below the current low. That price comes in at a level of $1,455, which is also just around this previous area of consolidation. You can see a couple of swing bottoms back there. That same indicator I was talking about before also gives the swing chart as well as the trend, so do check that out if you are interested. But overall, as the price does hover around 1,550 bucks, it's a pretty good area to get some more support in the market, because we do obviously have a previous area of consolidation that took place in late July and also early August. So to break it down a little bit further, any bounce up to around 1,800 bucks is still a short-term bear market rally, and I would be looking out for the next areas of support being around that 1,450, and worst case around those tops that we saw in late June and also early July, which came in around 1,200 to $1,300 bucks. But in the event of Ethereum holding up, consolidating, then getting back above $1,800 bucks, and if we do start to see some closes and higher lows above $1,800 bucks, I'd once again be getting really confident for a pump up into the low 2000s. Now, Matic topped out on the 14th of August, basically exactly at its 50% level, just a couple of cents over, but I hope you'll spot me. And the price level I've been looking out for support after we did get that breakdown was around that 75 to 80 cents. The current low comes in at 75.82 cents. So the next area of support I'm looking out for, should the market continue lower, is this intermediate 50% that does come in at about 68 cents. Now, it's coming from the top on the 14th of August down to the low on the 18th of June. You can see 50% comes in at 68.5 cents. Now, this is a really important support level now for the downside for Matic, because as you can see, we had a big block of consolidation all the way back from May into June as well. And there's a lot of transactions taking place there, and I'd be expecting this to be acting as support, which is also coupled with the 50% level, making it even more important. So any dump down to around 68 to 70 cents, I'd really want to be seeing support hold up and then start to work its way higher, because that could be a macro higher low before Matic does obviously work onto higher prices. But if the prices break below 68 cents and start to close, I'd be getting pretty worried about a retest of those previous lows in June, which did obviously bottom out at just over 30 cents. Now, I'm not saying that's going to happen. These are just the areas of support and resistance that I'm looking out for. Now, we can get even more micro, looking out for some overhead areas of resistance if the price does bounce from here. Now, we can be looking at that previous top on the 14th of August down to wherever this low does come in. Now, I'm going to be covering this in more detail throughout the week, but at least for now, we have resistance at 90 cents, which is also a bunch of previous consolidation, which took place earlier in August. So if we do get a bounce up to around 90 cents, just really look out for what the market action does around there. If we start to find some resistance around 90 cents and close weak, then I would be expecting another correction on the cards. But, you know, there's still a few percent in it to the upside, and of course it could bust right through. So do keep that 90 cent level on your chart. So a quick look at the total market cap does show that we got our macro resistance as expected, because it used to be macro support right around 1.15 trillion bucks. Now, I would be expecting the market to continue to grind within this slow recovery period. I don't think we're falling into a dismal recovery, but as always, I'll continue to keep this chart up to date for you guys to see what is coming up. By the way, the macro picture on the total market cap. But that's a wrap on another market update. If you did enjoy it, as usual, you know what to do. And until next time, I'll catch you then.